Hi, I'm Laura McMahon-Higgins. Welcome back to Nasty or Necessary, the series where we examine common clauses from commercial construction contracts to answer the question, is this commercially necessary or just plain nasty? Today we're going to look at termination for convenience clauses, which function exactly as the name suggests. This is what a clause would look like. The principal may, at its sole discretion, terminate the contract at any time and for any reason by providing 10 business days written notice to the contractor. There are a variety of reasons that a principal may want the ability to terminate a contract, even where there is no default or breach on the part of the contractor. For example, if commodity prices drop to the point it's no longer profitable to extract the commodity, which was a very common occurrence in the global financial crisis, or where a latent condition is so significant it affects the viability of the project as a whole, or where the principal suffers a financial loss in another area of their business, which means they no longer have the funds to carry out this project. It follows that the right to terminate the contract for convenience is very necessary for a sophisticated principal. However, just because there is an element or background of necessity to a clause doesn't mean that its operation can't be nasty. What we actually need to consider here is not the clause on its own, but what rights the contractor has after the clause has been activated. Now, generally, most contracts will allow the contractor to recover payment for work completed to the day of the termination, plus payment for goods or materials ordered in expectation of carrying out the works, providing the title to that material transfers to the contractor. And that's it. And this list leaves a lot to be desired. Two important things are missing. The first is the profit the contractor would have made on the works they're now not going to get to complete. Let's talk about why this matters. Let's imagine that I asked you to give me a price to build a house, and you went through all my documentation and said, Laura, I can build you this house for $400,000. Then I say, okay, cool. What can you do for me if I want 10 houses? Now your eyes light up. That's a big chunk of profit for your company, and it means your material costs will drop. This is basic commerce. It's the volume discount. The more you order, the cheaper it becomes. It's the reason why people go to Costco and buy their washing powder in bulk. So you say to me, Laura, if you want 10 houses, I can do it for $350,000 a house. Now let's imagine that we sign the contract, you build the first house, I give you your $350,000, and then I terminate the contract under the termination for convenience clause. Now you will get paid for the work you've done to date, plus any materials you've ordered, which then become my property. The end result of this is that you've built me one house for $350,000, but you would never have given me that price if I told you I only wanted one house. For this reason, if you price a contract based on a certain volume of work, and through a termination for convenience clause, that volume decreases dramatically, you may want to be able to claim the profit you would have made on the work you didn't get to do. Or in other words, claim the loss that you've suffered as a result of this early termination. The other thing to consider is demobilisation. If you are a contractor whose works involve significant mob and demob, then this is really important for you. Currently, the contractor would be left to wear the demobilisation cost because it's not A, a cost incurred prior to termination, or B, a cost of materials ordered. So if you're a contractor and you're faced with signing a termination for convenience clause that looks like this, if the contract is terminated pursuant to this clause, the contractor may claim from the principal the value of the works completed prior to termination, but not yet paid for by the principal, and the cost of any goods or other materials reasonably ordered by the contractor for the purposes of carrying out the works, providing such goods or materials become the principal's property upon payment. Then you need to consider whether to add the following: the profit and overhead the contractor would have made on the value of the works not completed prior to termination, and the direct cost incurred by the contractor in demobilising any plant or removing any temporary works. So termination for convenience clauses are going to weigh in as toward the necessary end of the scale, but make sure you check the contractor's entitlements upon termination to make sure that the flow-on effect of the clause isn't too nasty. That wraps up this episode of Nasty or Necessary. If you found this helpful, please sign up to complete my training course today. Understanding Construction Contracts is available in person or online. Online, it is self-paced and full of videos just like this that explain concepts in a simple, practical way that will actually make sense.